This is the London FinTech Podcast, brought to you by your host, Mike Ballerman, bridging the worlds of suits and t-shirts, of finance and technology, bringing you insights, stories, and inspiration from the golden age of opportunity and innovation happening in London right now.
Hi, this is Mike Ballerman, and this is London FinTech Podcast, episode 31, and I'm delighted to be joined on the show today by Rich Wagner, founder and CEO of Advanced Payment Solutions, APS. In a world where some of the largest fintechs were formed only a few years ago, it's rare to meet one that's been going for 11 years. APS is one of Europe's most innovative payments solutions companies. APS provides banking products to individuals, SMEs and the public sector, specializing in business expense and current accounts, prepaid debit accounts and lending products such as overdrafts and credit cards. With APS, consumers and businesses can set up a Cashplus current account online in minutes without the need to go through laborious credit checking processes. I wonder how they do that. You, like me, may not have heard of APS, but in terms of impact, over 1.2 million Cashplus cards have been issued to date. They serve 50,000 SMEs. They provide banking solutions for benefit recipients for 30% of local authorities in the UK, totaling something like £180 million of benefits every year. They've processed over £3 billion of payments to date. Furthermore, this year, APS became the first non-bank to team up with a post office, allowing customers to access their accounts from post office branches. Rich is one of the grand old men of payments, having started in payments long before APS. The company founded has a long record and deep penetration. So who better to give us an overview of payments in the fintech age? Plenty to talk about, so let's get on with the show. Hi Rich, thanks for joining me today.
Well, thank you very much for inviting me. I've always been very excited about talking about payments, and anybody who gives me the chance, I am greatly honored. Fintech, in my view, is a hot space now, and payments, in my opinion, is in the sweet spot of this fintech euphoria. And London, in my view, and you can hear my American accent, is the center of all action. This is not about London being the center for the UK, but in my opinion, and even in the opinion of my investors, the entire world. So we're in a hot spot right now and look forward to having the conversation with you.
Excellent. Well, normally myself, I find it rather more difficult than you to get sexually aroused by the whole world of payments and excited or in any other particular way about it. Although at the moment, we're very much, as we're recording this, in the Apple Pay season. And so we're all being bombarded by propaganda, and old folks like me don't understand how to use tap and pay on the underground and all that kind of stuff apart from the Oyster card. So it's probably quite a good time. You mentioned your membership of a minority group. Your chum Mike Laven was on before, and I teased him mercilessly about this, the minority group that is 4% of the world's population, but roughly 99.4% of its tech applications, and certainly 99.99994% of credit card payments and all that kind of stuff. So, as we're, as usual, in another poor UK summer, what on earth are you doing, and apart from the fact you tell us we're wonderful, what on earth are you doing in a country with such bad weather as this, given that I believe you came from California?
Yeah, from San Francisco. I got an opportunity to come over here, surprisingly enough, in payments to launch a credit card operation that ultimately got sold to Barclaycard in early 2000. And I was one of those Americans that actually didn't have a passport, never thought that I would be traveling internationally, and fortune may have it that I married a travel enthusiast, born in Malta, and was one of those hostile backpackers who traipse Europe, who traipse the Asia coastlines. And so unfortunately my prenup agreement wasn't anything to do about money, but was the fact to get a passport. And when the opportunity to come to London happened, and the guy said, "Do we need to convince your wife?" I said, "She's already packing her bags and she's ready to go."
Oh, brilliant. So which year was that then, roughly?
That was 1999.
1999. Just after I went independent in 1998. I remember back in the day when words like Sloane's and Princess Diana were writ large. A. Sloane, Carmel Benson, telling me that the criterion for being well-travelled, and her criterion for well-travelled, was that you're well-travelled if you've been to the same number of countries as your age, and that you're really well-travelled if you've been to twice the number of countries as your age. And of course, this gets harder as time goes by. I don't know how many countries your backpack has taken you to. The podcast, now being roughly 1 year old, has actually reached 94 countries, and I can't say I've reached those 94 countries myself, but are you well-travelled or really well-travelled, or did you give this up a while ago?
Yeah, the problem was when you basically told me that I was an old man, then I am going to have difficulty in actually reaching that type of metric, but I think I'm probably in the 20 to 25 countries, and actually went from a little bit of aversion to doing it to actually now being married nearly 25 years, actually enjoying it, and it's certainly one of the big hobbies that my wife and I I very much enjoy to do. And being in the UK, the doorstep to Europe, my wife's a historian, and so she just loves the history that Europe offers versus that, short 250-year history of the US.
London actually is quite a good place. I'm never quite sure whether it is the leading capital of this, that, or the other, but it is a very good place for finance, financial services, and fintech, and there are quite a few folks over here. So moving on to APS, so what made you start APS? As you say, you had a business before and you sort of sold that to Barclaycard. So what was it that made you wake up one morning and think, I'm now going to form APS today, dear, to your wife, and you got out of bed and formed APS?
Yeah, I think it came out of personal experience. I mean, I think the one issue that banks have problems with is people like me, an expat coming into a country. And what happened to me, came over in 1999. I was getting paid by a U.S. company. And I was fortunate enough that they basically provided subsidized housing. So the lease or the rent was in their name, the utility bills were in their name, and thus, although that was really good from a financial perspective, it meant that I was nowhere on the radar screen for any bank. And I could not get a bank account. I was a reasonable earner, I was an executive at a bank, and it took letters from my banking institution, from the UK HR firm that we had, and it took me about 6 months to get a bank account. I was unbanked.
How much of this is a European problem? How much is the banking problem? Because again, going back to just thinking of friends of mine that I know that say gone to Japan or gone to America, one of the things that people moan about around the world when they become an expat is, I went to country X and it was a nightmare getting a bank account.
It's not an isolated problem for the UK, but I find that in this world of globalization, Experian and Equifax are in the UK. Experian and Equifax are in the US. So it doesn't take very much for a bank to basically say, this guy is clearly disclosing that he's a US expat, he's not a UK citizen. Instead of pulling his credit information from the UK Experian Equifax, maybe it should be a smart idea to actually pull it from the US Experian Equifax, where I had plenty of data, mortgages and things of that sort. But that lateral thinking actually doesn't work necessarily.
No, it's a point that's one way to... So maybe before we get into payments, maybe we can just talk about the money in the first place, because all payments is, going back to my simplistic understanding, is moving it from one bank account to another bank account. So, as I mentioned before, one of the many things that you guys do is provide, should we call it, alternative banking solutions. You're not a bank. So how does this work? How have you solved the problem that you had in the past for new Americans or whoever's they are moving to the UK today?
Yeah, let's go back to the definition of what you need from a bank. You need to basically be paid, probably from an employer or someone like that, and to pay a utility bill, your groceries and stuff like that. And that's how simple I think banking is. And I found it quite interesting. Bill Gates had a great quote, and something I use in a lot of presentations. Back in 1990, his quote was, "Banking is necessary, banks are not."
Yes, I've used that on myself, actually.
Yeah, it's very true, because...
Just deconstruct it, because as I keep using it, it must be wrong. So, banking is necessary, banks are not. Okay, so he's completely wrong then. And the reason he's completely wrong is because, although there's a lot in that which is true, which is that you don't need everything that's currently done by a bank to be done by a bank, what it's omitting is the fact that it's a misunderstanding of the nature of money. Money is bits in a bank computer by definition.
Yeah.
By definition. So all fintechs are doing is actually just moving bits in bank computers more efficiently than the banks can do it and charging less for it, perhaps.
Yes.
But you can't do away with banks, otherwise we have to do away with money. And I don't mind that, but that's a big show in itself.
Yeah, and I do think a great way to differentiate in that quote, the banking element, and you talked about other payment players that have been on your show before. When you move money, many people can do that. Western Union does it, Currency Cloud, TransferWise, all these players can move money. A lot of respects, we move money under the foundation of a current account through the faster payment systems. To your point, yes, banks are somewhat necessary. When you say, if you want to hold money, meaning deposit, that's where banks play a role in the environment. And if you want to invest, those are the two areas where you really do need a banking license, and where the regulatory framework really plays a role in society in terms of making sure your money, when you hold that money, is protected in the financial compensation scheme, and we saw it very much in action in 2007, 2008.
I know, because I was doing a gig at Landsbanki at the time, which was the one that blew up and really involved the financial compensation scheme.
Yeah, so I mean, it's good to know that when you hold your money at an institution that is regulated, which is a bank, you know that your money is safe and protected, no matter even if the management basically blows the bank up.
So coming back to APS's current account then, so just explain in simple terms to me, I'm sure the listeners always understand more than I do, but so what is a non-bank current account, if I'm allowed to call it that, or an alternative current account?
It's an alternative bank account. And when I say alternative, it is a bank account. We have a sort code. We have an account number, and you get a MasterCard debit card with 16 digits on it, which you can use to shop online or shop in a store, just like the cards you hold in your wallet.
So just to be clear, so from the user experience, if I have one of your accounts tomorrow, as far as my user experience is concerned, or let's say my mum knows slightly less about FS, if she has an account with you guys tomorrow, as far as she's concerned, there's no difference other than you presumably provide a superior service, otherwise people wouldn't bother.
Yes, that's exactly it.
It's just behind the scenes, you don't stick the money in a safe in the corner.
Nope.
You actually presumably just wholesale it with Barclays or whoever.
Correct. So our corporate banking relationship is with NatWest and RBS, and you're right. So it functions, operates just like a current account. The only thing we actually don't do is clear those old-fashioned checks. But as the money sits there, the one difference is our funds actually are not safeguarded by the financial compensation scheme.
Yep.
Actually, that's not good. The good news is the regulators say, as a electronic money issuer, which we are, which is not a bank license, it's a license right below a bank, it says you can take customer money, but you can't do anything with it. And what they call it is safeguarded funds.
Right.
So I always explain this, and this is how we were able to get the trust of the local authorities there, because they want to make sure when you're giving benefits money to the millions of benefit recipients in the UK, they want to make sure that we're good for it. This money is actually safeguarded. And in a lot of respects, and a good example of this would be is, you wind back the clock to Northern Rock. You had 20,000 people outside, all wanting to take all their money out of their account.
Yeah.
We hold over 100 million pounds of money, customer money. Yeah. A great responsibility. But I will tell you this, if somebody put out on the internet that APS is going bankrupt,
everybody can take their money out tomorrow because you're not leveraging it.
We are not leveraging it at all.
So the only problem for your account holders would be if, for the sake of argument, NatWest goes bust.
Correct.
Because then presumably something you like, APS would only be guaranteed to 75 grand on the FCS or something like that.
Correct. But the regulators actually thought of that scenario too. And we are in a contractual relationship with RBS and NatWest that these are safeguarded funds. And so they are one of the first funds that basically are available to customers if you have a wind down scenario within a bank.
So you're quite up the credit.
We're way up on the credit scheme in terms of the probability of actually paying out in a catastrophic event is extremely high because these are safeguarded funds.
And also, of course, going back to this whole idea of the model that banks may end up just being the infrastructure provider in the same way that the grid is, and you can stick your wind farm and you channel the electricity through the grid. In these circumstances, as long as you choose one of the principal key, vital, mustn't fail banks in the UK, you're sorted, because the UK government can't in any conceivable scenario let an RBS go bust or a Lloyds, as we've seen.
Yes.
It may let one of the smaller ones go bust conceivably at some point in time.
Yes, I would agree. We were quite nervous actually in 2007, 2008 until basically the government bought out RBS. But I think we sit here today with them being owned, well, it was 86% ownership. As they're selling their shares now, I don't know exact ownership, but I feel relatively safe that our customer and our business monies are sitting in that bank.
Okay, Rich, so basically you're providing a full range of banking services to consumers who can have effectively a current account with you. No, effectively they do have a current account. It's got a sort code and all that kind of stuff, so I can transfer money into it or you can pay me out of it and all that kind of stuff. The money is held, like all money, in a big bank's account behind the scenes. And in terms of then providing a superior customer service around not taking months to open an account, but you've still got to do the AML and KYC and all that kind of nightmare stuff. How in practice do you manage to discharge those responsibilities 100 times faster than the bank, say, or whatever the ratio is in time?
I guess the benefit we have, even though we're 10 years old, we certainly aren't 50 years old, and we've benefited from the digital age and allowed us to basically build newer technology capabilities and actually access data in ways that the fintech movers are basically able to do, where the NatWest and the RBSs of the world, as much as I respect them, we're clients of theirs, they're the Titanic. Probably Titanic is probably a bad algorithm, but we're talking, the big USS Enterprise in terms of it will go straight down the ocean, and man, you're going to have no problem with that. But if you want to turn left or right, it's just not going to do it.
I think if you're going from the Titanic to the USS Enterprise, you've gone from one extreme to the other. Because one was a ship which sort of sank on its maiden voyage. The USS Enterprise, under James T. Kirk anyway, got all around the galaxy, mate. So I think there's an analogy failure going on here. But coming to these points, I was talking to the CEO of a peer-to-peer lender recently who was very much exercised by the problem of AML, in that as the government, as the state has nicely defined it, you, the CEO, are, I don't know, this personally responsible, maybe you're personally responsible for AML, and if you don't do AML properly, you can be locked up in the Tower of London and fed bread and water for 10 years. Set against that, AML is something which nobody can actually execute to 100.00%, because you can't really know. All you can do is just do more and more checks, which of course is why banks are getting slower and slower, because the more that people find them billions, the more checks they stick in. But by definition, you can't do it. And it seems to me that AML and KYC are really something where the state needs some kind of API where you bung the information into it and they come back saying, fine, stamp like that or something, or some government agency. Another example is a DVLC. You can go to the DVLC and say, is this car taxed on whatever the DVLC do, or something like that. You know?
I do think that a centralized database for KYC is something that is one of the objectives of the Emerging Payment Association, which I'm an advisory board member on. It's certainly one of the initiatives that they are pushing within the public agenda. It would be useful, but I'll be very honest, I actually think there are a tremendous amount of repository, mobile phone databases. Credit bureaus are fantastic here. Both Experian and Equifax have a rich set of data on you and I to allow banks to make effective credit decisions and what we call authentication decisions, basically that know your customer, and even company house. And this is how we've been able to exploit and get the application time down for SMEs into minutes rather than days, is that we have an API call right into Company's House to actually ID the company. We then know the 4 or 5 directors, and because of our KYC capability on the consumer side, we're able to KYC in an electronic way those directors. So there's infrastructure there, but I wouldn't disagree with you. A centralized repository would be a major step forward for players that are out there.
So it's interesting how you describe it. So I can see that the difference in you and this other chap I was speaking to, the CEO, was that this is your bread and butter. This is the heart of what you're doing. If you're just I don't mean just in the wrong way, but if you're a peer-to-peer lender, your main job is worrying about the assets and investments and that kind of stuff, and less about checking about it. And in a sense, using a tech phrase, everybody's writing their own, let's say, use the old-fashioned word, subroutine. This is their KYC subroutine, this is their AML subroutine.
Yep.
Some people's subroutines are better than others, but there's a hell of a lot of duplication going around the world. And there is this legal responsibility that the state has had the cheek to stick on individuals such as yourself. And I say the cheek because we all know that sort of terrorism and spying and Russian money flowing around and everybody's funny money flowing around continues unabated. And it's the little man that tends to get caught by these things.
Oh, absolutely.
It's a huge hypocrisy. I blame Gordon Brown myself.
You look at the £2 billion fine that HSBC had in terms of inappropriate controls around basically the movement of money. What did that cause? It caused actually a reassessment of the businesses that they wanted to deal with. And literally 18 months ago, they wrote letters to probably 2,000 SMEs saying, your bank account's going to be closed in 60 days. Thanks for your business.
Exactly. And politicians in Westminster start complaining that the banks are letting SMEs down. It all gets very circular. Right, okay, so I think we've got that. So starting with the alternative banking provision, I think you've explained quite clearly how a non-bank like you can do it. I wasn't completely familiar with what was it again? Electronic money?
Electronic money license.
An electronic money license. So you've got an electronic money license, that sounds nice, which does provide some kind of regulatory comfort and protection to people out there. Otherwise, I on the London FinTech podcast could start setting up an alternative current account tomorrow and offering it to people, but without the kind of depth that you've got behind it. So we've got the money is stored in banks, or you can interface these days through a FinTech, likes of APS, and have a current account through a non-bank, thereby salami slicing the banks even more. So then we get on to the payment stuff, which is having money in accounts. How do you move it from one account to another? And from the outside, I do get a little confused over these thousands of payments. And if I really sat down and scratched my head, I could remember the difference between Square, Ripple, Apple Pay and Google Pay or something like that. But just in terms of helping the listeners, how would you segment this sort of apparently thousands of payments, startups and fintechs that there are out there?
They fall into two categories. Basically, companies that facilitate the receipt of a payment, and those are typically called merchant acquirers. And the merchant acquirer is basically somebody that supports the merchant. And for example, I went to Pret today, and when you go into Pret, there's a little machine actually that sits in front of you, and basically the nice lady or male on the other side gets you your cappuccino. You get the cappuccino, it's £2.30, and you can pay by cash, or if you're going to pay by card, it goes onto that card machine. And you got people like Square and Go Cardless and and the big guys like WorldPay and Evalon who support that infrastructure for that merchant to be paid. And I think that's the one big category. And then to pay is basically you've got fintech players like us, and I'll even put the banks into it, to be paid. The people that actually issue you a card to facilitate the payment. It could be a card, it could be basically a virtual account. Anything from Optima Payments, a large player in the virtual world. You've got players like APS with their debit card, and a whole host of TransferWise who provide an online portal to transfer money. They're basically initiating payments for the individual. Then you've got basically the people that sit in the middle, which I call the schemes. You'll know them more fluently by Visa, MasterCard, American Express, and if you want to get really crazy, JCB and Asia Pay and China Pay and those types of players. They basically facilitate the interaction between that merchant acquirer and that issuer of that product from the consumer side, and they provide a guaranteed payment network in which money flows through so that both parties are actually given what they were required. A debit on one side, a credit on the other side, and you then have payments.
Okay, so that's nice and clear. So you've got those three. You've then also presumably got alternative money stuff like Bitcoinies, who are none of the above. They're living in their own little world where they're trying to create their own money and means of moving it from one of their places to another place, or be a part of the blockchain to another.
To be fair, on the Bitcoin stuff, they're trying to create their own ecosystem.
Their own world.
Their own little world. So if you take basically the concept of that three-party model that I talk about, basically Bitcoin in itself, in its own ecosystem, is trying to do the same thing, except they're trying to do it holistically, almost as one entity, rather than the fact that the way the payments world grew up is that you really have these three-party people. You've got the people that are the merchants and the acquirers that help the merchants. You've got the issuing parties that help the consumers, and you got the schemes. Bitcoin basically creates a ecosystem in a virtual arena, which basically supposedly allows for the transfer of bit money in a more seamless way. I'm not actually bought in. Maybe I'm too old for it. I'm still not convinced of that.
Well, exactly. I think more and more people aren't convinced of that, and fortunately we're hearing less and less of Bitcoin as time goes by. It was a great leap forward from previous digital currencies, and one or two great leaps forward from Bitcoin. Once we're onto Bitcoin 10.0 or something, and that will replace global money. But until then, let's not worry about it.
Yes, I would agree there.
Moving on from money, and then these three categories, and the fourth being the alternative one about how it's moved around. If we could move to sort of just to a practical level, we were talking before, Rich, and I was saying that for me, payments has never been something that kept me up at night or really worried me, because every time I made a payment, it's worked my entire life, whether it's been by MasterCard or whether it's NatWest or whether it's sort of BACS or faster transfers or whatever. I've never actually had a payment fail. I've never seen it as a problem I need fixing. Now, I think possibly one of the things that comes along is that it's not so much fixing, it's just utilities. So all this tap and pay stuff, which actually even an old boy like me does with an Oyster card, I tap it, and now I can understand that I can use my phone, although actually I can't use my phone, and things like Apple Pay and all that. This is just going down the direction of, actually, we've all got these smartphones, so why don't we stick everything on them, isn't it, really? So it's just a kind of utility rather than there's a problem needs fixing. It's just, we've got this, might as well put my wallet on it.
You said it better than I could. And I think you said something very interesting, and what I see in a lot of the innovation.
My approach to saying something interesting is just to keep talking, and eventually, by random, the monkey types some Shakespeare sonnet.
Absolutely. But you mentioned something there that I've taken away in all my career. There are so many, not to rehash Bitcoin, it's sexy, it's cool, it's kind of unique, it's kind of avant-garde. But I agree with you in terms of payments. It's a little bit boring when you look at the really nuts and bolts of it. But what's really interesting about payments is it is an ecosystem that basically has been developed over many, many years. It's a solid infrastructure. And what you need to do when you're trying to do something new, are you solving a problem?
Yeah.
And you said that, is it solving a problem? And I think things like Apple Pay and Tap and Go and those types of things, it's an alternative solution. I'm an early adopter in payments because I have to be. I'm a CEO of a fintech player payments company, so I am an early adopter. So when, Tap and Pay came out, I basically put it on my phone.
And you've got a Samsung phone like me.
Yes, I do.
So how does that work then? Because Apple Pay gets all the publicity, and I think people know how to use that. So how do you do it on your Samsung phone, which has had near-field chips in for ages? But as far as I know, I keep tapping my phone on things and nothing actually happens.
Well, first you got to get a registered payment token actually onto the phone. So
silly me, I've forgotten to get the registered payment token. I should have guessed. Yes.
Yes, it's not that technical. There is, of course, the app, that you need to download. And this is an app that comes from another fintech player, probably an unknown one to your audience and yourself, Prepaid Technologies, along with EE. They partnered with EE, so I've got EE, and Prepaid Technologies offers a similar type of product than ours, but in a virtual world. So you go to the app, you download this payment token, which is actually a MasterCard virtual account, which is contactless enabled. It sits actually on your phone after you download it. You then basically transfer money into the phone. They don't want a huge amount on that. You put 20 quid in the phone, just like you top up your Oyster card.
Yeah.
And at that particular point in time, you now have 20 quid in your wallet.
And that only works with EE then?
It only works with EE at this particular point in time. And then basically you tap and pay. And I was an early adopter. I got it. I put 20 quid on it. I probably have 15 pounds, 50 pence still on it. Because I tried it and I said, okay, did it really solve a problem for me? Well, I've got my phone in this pocket. I've got my wallet in here. So if I'm trying to, get out of the tube station, it really doesn't make my life more efficient. A simple contactless card, the one that APS issues, or any of the banks, is just as easy as actually it being on your phone. And that's where I've got a fundamental challenge to Apple in terms of, does it really solve a problem?
It's a very good point. I mean, Dave Birch was on the show LFP032 talking about what he saw as the 5 strategic trends in payments at the moment. And I was teasing him because he had an unconference, I think the day before Finovate or something like that, to which I went. And the vast majority of people, and these are payments nerds, without being rude, people such as yourself are really fascinated and get aroused by payments. And the majority of those people paid in cash. Because do you know if it's a £5, look, here's a £5, it's just simpler. Done, I've got some cash here, let's do it. So just on the Apple Pay then, let's pick up on that Apple Pay, Google Pay or Samsung Pay or EE Pay and all that kind of thing. So I can see that, especially Apple that has one consumer experience and does that well and tries to pull everything into it, that from their perspective, the more you use their phone, the better, because they get lots of spin-offs from that. But do they manage to take a slice of any of these 3 chunks you're talking about?
Oh, yes, they did.
Being Apple, they're presumably trying to make money.
Yes, and I had a number of interviews when it launched this week with a number of the financial editors, and certainly the one thing everybody wants to know, what's the commercial model? Now, Apple certainly, I don't know what the commercial model is, but certainly what's been rumored and what I would have to think is that in that 3-party model, basically when you use your particular card, basically the merchant has to pay a little bit of a fee to basically have that transaction go so that they don't have to actually transact in cash. And that's called interchange.
Is this the thing that used to be something like 5% or something back in the day? I remember decades ago, I thought when I got my first credit card, that I thought when I went to a shop and used it, I thought the shop was charged 5% for the benefit of using it or something like that.
I don't know, since I've only been here for 14 years, it's been as high as 2.5%.
Getting on for that, percentages rather than basis points.
Yes, exactly. And in the States, it's 250 to 300 basis points, so 3% of the transactions, even in today's market. Well, the retailers have had their day at the European Commission, and those particular interchange rates that banks have enjoyed for many years are going from those 150 to 200 basis points, 1.5 to 2%, down to 20 basis points. That's 0.2%.
So going back to what's broken in payments, for a consumer like me, there's nothing directly broken in payments because I don't pay anything for using my credit card. However, for the business on the other side, the broken thing is that they've got this very high fee for something that's very electronic. And of course, ultimately, we, the consumers, end up paying for that somehow.
Exactly.
It's bundled in the price of their whole, whatever you're buying, their cappuccino or something. 5 pence of that is because they've got to pay these kind of things.
But my question is that the argument, and you're going to hear a biased view from me because I was one of the participants who receive that 2.5%, so I'm going to be a little bit more biased in terms of my view. The argument being made is exactly what you're saying, is that retailers had to inflate their price to be able to allow you as a consumer to buy that cup of coffee. Okay, fair point. I do agree with it. Now the European Union has actually mandated that I, as an issuer of this card, now are only going to receive 10% of what I used to receive. Yeah. Does that mean that when you go in and get your cup of coffee from Pret, or more importantly, many of the big retailers, you go into Asda or IKEA, they're going to show you that 2% discount now across everything?
It's exactly the same as when you go to a hotel and they say, we believe in saving the world and ecology and all that, so please don't wash your towel every day. Fine, okay, do I get a refund for that? No. They transfer the benefit. So it's an interesting question. Again, come back to the States versus the European Union and all these different models we've got around the world, because, as you say, over here it's regulated and there's a body that can say, look, the fees are going down. In the States, I'm not sure that there's a body that's quite as powerful as the EU that can say, okay, all your fees are going down. But again, in a free market, which certainly we don't have, we've got oligopolies in everything, you would assume logically, and this probably doesn't do your business much good in the long term, but the long term seems to be quite long. I mean, one of the things that Mr. Burt said, and he's been over here for 30, 40 years in payments, was that he hears the same complaints now he did 30, 40 years ago about they're expensive, slow and opaque. So they haven't changed very much. But in an electronic world, going back to the fact that all money is bits in bank computers, and changing bits in bank computers doesn't use much electricity, presumably in a free market, eventually you get to fees being roughly zero, although it probably isn't going to worry us before we sort of pass on.
At 20 basis points, 0.2%, I'd certainly not a big player in my P&L going forward. And so you got to be, one, smarter on the cost. And I think being a fintech, the great thing about technology is, think about your computer. I remember when I bought my first computer, it was 250K of memory, not 250 megabytes of memory. And I've got probably a computer today that's 20 times more powerful than I bought 20 years ago, but it's actually half the price.
My first laptop I bought in the late 90s, and I've kind of observed that laptops and PCs haven't really changed price. They've improved in specification, but somehow they never get much below 500 quid.
Well, it's true, but you are getting such a more powerful machine, and even in business, my ability to store you as a customer on my database probably halves every 5 years. And so the fact is, I am getting a little bit of economies of scale as technology grows, so because I'm not going to get that revenue now, I got to get smarter and more innovative in terms of how I create value for you, which in turn creates value for the organization.
So that sounds like a very good lead-in. I wish we'd scripted that, but fortunately I've got a good interviewee this week. It sounds a very good lead-in to the third section, which is about APS and where you guys are going. I think you've explained very clearly, Rich, the alternative banking and holding money, and how the money is transferred and how the payments landscape can be segmented. So every time listeners hear of a company, they can think of which of the buckets it goes in. So in this electronic world, and given that you have been around for 10 years, so you've seen much more evolution than almost every fintech going, you've probably got a better view of where the next 5 or 10 years is going with that length. So where is it all going, and where is APS going?
I think in terms of, I call it niche banking. You and I grew up, and for me...
I still haven't grown up, actually. I just look older. I'm probably even more immature than I was in the first place.
I use my parents as an example. My parents, absolutely, they opened a bank account when they were 18 years old. They got their first car loan from their Bank of America. They got their first mortgage from Bank of America. They got their first savings account from Bank of America, and they got their retirement plan from Bank of America. And in today's world, even for myself, that is pretty true, except for the fact that I moved country and I did have to switch banks, but pretty much have been with HSBC since I've been here. And to be honest, are they good? Not really. But do I really want to move? Not really.
Well, it's what your friend Mr. Levin always says, which is that people sort of change marriages more often than banks. To which my retort is, that's because marriages can be more of a problem than your bank.
If they don't screw up, they won't.
Or if they don't screw in the marriage case, but let's move on from that.
Well, but I think there is opportunity for fintech players, and not just myself, the TransferWise, the currency clouds of the place, because I think people are more open to the fact that if you provide a better solution, a faster solution, a simpler solution, actually now with technology these days, I don't need to be tied to NatWest or HSBC. I actually am a user of TransferWise, and I think it's a really great solution out there. I don't necessarily need to go to my banks. I save money, and the interface and the simplicity of it makes it a nice solution for me. And so I can compartmentalize certainly my money transfer needs. I can compartmentalize my investment needs. I use a separate investment broker. And so I can actually create these little pots of where, this particular supplier of my payment needs actually can do it better than HSBC.
It's very interesting because I was talking to somebody yesterday about the real problem in banking, and I said it's nothing to do with the things that people normally talk about. The real fundamental problem in banking is that they've grown so big. They're vast conglomerates which can't possibly have a focus. They do a million things, and therefore they do a million things not particularly well. And actually one of the simple things that's happening at the moment is, forgetting words like fintech and digital and all this kind of stuff, is actually you're just getting small players that are focusing on customer service and doing a tiny part of what a Barclays or a Citigroup does, and actually just doing it very well. And as the customers of these are just pissed off one way or another, not least of which because they bail them out, why not use APS for my current account if you're going to be nicer to me than HSBC, who when I opened a business account, it took ages and they wrote back to me and said my signatures aren't similar enough. At which point I try and make my signature more similar, at which point it doesn't look like my signature because I've never thought about it because I just write it. So where is APS going then, Rich, in terms of your concluding remarks? What should people be looking at APS for, and what should they be expecting coming up in the future?
I think certainly making their lives easier, simpler with financial services products. So everything from the current account, let's make sure each and every one of the customers actually can have a perfect experience. We know that we satisfy about 85% of the customers in a very seamless way. 15% still need to send in paper docs. How can I get that to 99%? In terms of product innovation, how do I actually get even credit products to them faster in the way that I'm providing debit products today? And actually, how do I control actually more of the ecosystem myself? So I'm not actually having, my high street bank kind of looking in and saying, you know what, I really don't like you doing that particular activity. I go, yeah, but I'm actually okay with it. And to your earlier point, I'm the one that's actually going to go to jail, and I'm going to be the one that's actually going to get fined if I don't believe that process is correct. I don't want to have a big brother telling me that I can't do something when it's my own destiny that I like to control. And that's the point of trying to get access. There's only, 7 banks that actually have access to the clearing systems within the UK. And there are 500 payment institutions out there. All of us have to go through that big brother type activity. And I think breaking that down, and one of my roles in advisory capacity at the EPA is to facilitate that activity happening at the payment systems regulator and at the Bank of England to allow not only us, and I do believe allowing us gives us the success and the leading edge against everyone else, but I'm also here to really help the payment ecosystem to be a better place for our kids for years to come.
Well, that sounds a very good note to wrap up on, and it's a very noble thing. I mean, using I'm sure, from a technical perspective, very poor analogy or metaphor of the national grid, the more that the national grid becomes like the roads, something that everybody can use, the more that anybody can stick their wind turbine on it, or petrol thing, or biodiesel or whatever you like, and provide electricity for everyone's benefit. And I think that my simple takeaway, it's been very interesting talking to you about this, my simple takeaway is that APS is a company that's got 10 years experience. You've done billions of pounds of this stuff. You've got a hell of a lot of depth. You've done over 1 million Cashplus cards, that if people are fed up with their bank, then there is a good fintech out there that can look after their money for them in a current account and warehouse it, as you say, with banks, so there isn't the credit risk there. And there are payment solutions around which are simpler, and it's more focused on customer service. So coming back to the fintech thing, I think that it does fit to the fintech thing, which is that you're customer focused, you're simple, and you're clear, and if you don't do a better job, people don't come to you.
Exactly. My view is 14 years ago, I had very bad experiences with the banks, and I'm trying to ensure that basically it doesn't happen to the next guy who gets here and has a great idea and wants to set up a business or come here into the UK and forge their own new career and get a bank account a lot easier than I did 14 years ago.
Great. Well, I think it's at this point I'll turn the microphones off and talk to you about moving the London FinTech podcast's massive debts over to some current account, but maybe you don't want to accept those because of all the AML and KYC risks.
I know you now.
Exactly. So I think the answer is no. So thanks for that, Rich. It's been very helpful.
Thank you very much.
Thanks for listening. If you enjoyed the show, please subscribe on iTunes or your podcast app, or sign up at londonfintechpodcast.com for email alerts of new episodes. Live long and prosper.
We could sit in a band there all day, watching the firelight dance, watching the firelight dance. We could walk in the mountains before dawn, watching a happy moonrise, watching a happy moonrise. the mountains and the trees. Can you see what I mean? Can you see what I mean? We fade in between the earth and the sky. Kiss the city goodbye. Wave the city goodbye. Wave the city goodbye. Wave the city goodbye. Watch the firelight dance with me. 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 Watch the firelight